Recording in progress. What's good, y'all? It's your boy KC2 Real, man. I'm back here with another Talkin Stock Tuesdays, man. We got a super special exclusive episode for y'all tonight. I got my boy coming on, special guest, Chung Fu Billionaire. He gonna be giving y'all a 101 on futures trading. So people that don't know anything about futures trading, you've been looking into getting futures trading, you've been hearing about it, and you need to scoop. You know we got you on this channel, man. We coming. We need more special guests. We trying to get the guests working. We've been in the works, putting things together for y'all to give y'all the best info possible. Of course. So soon he'll be joining up. Um, so first things first. Um, I just want to go ahead and give y'all the disclaimer. Of course, always do your own research. Anytime you make an investment, please consult your own financial advisor. Please research any information you hear on this channel before you make an investment decision. Okay, so with that being said, as you can see, as the profile pic, it's a lot been going on in the country, man. It's a lot going on. And I know this isn't a political show, but things that happen in the government, things that happen across the nation, they all affect us as retail investors. We're not big banks, we're not hedge funds, we are regular people. So all these situations affect us as well. So, well, yeah, I just see my boy Chung Fu just came in. Yo, it's
Yo,
good, my boy.
what it do? What it do? What it do? What it do? What's happening? What's happening? What's happening? Yeah,
What's good? What's good?
live and direct, live and
What's up,
direct.
brother? All right, look. So, let me just give you the. Hey, man, I appreciate you for pulling up. Let me just give you the scoop
Yo,
real quick. So basically, I'm gonna run through some basic stuff. I got some little watch list type things that I do every week, and then I'm gonna go into some relevant news. That's how I kind of conduct the first part of the show. And then, of course,
okay,
I already told them that we got that 101 on the futures coming. So, we're gonna get into that right at the end. So, just
yes,
hang
sir.
with me. You can jump in on any of these topics if you want to. Put your insight in. So, whatever you feel like
Okay,
doing.
cool,
All
cool,
right,
cool,
bet.
cool.
So
I'm
let's
a,
run it.
um, I'm, I'm gonna get my what's it
All
called? I'm
right.
gonna get my PowerPoint straight, so I'm gonna mute my audio and my camera. I'm gonna get my what's it called? I'm gonna get my PowerPoint straight, so I'm gonna mute my audio and my camera.
All right, yeah, do your thing, bro. All right. So first things first, the market vibes of the week. We got the S&P 500 just hit its highest level since February. So it's up 0.55%. It's Tuesday, fueled by Tesla's 5.7% rally over the robo-taxi hype and optimism over U.S.-China trade talks. So basically, things have been on the up and up. The market has been holding resilient. Is this the taco trade? We will see. But so next thing is retail traders are straight up painting the tape. Buying dips has been a trend. Through Moody's warns dip buying in private markets is risky. We got U.S. China trade talks resumed in London. Today was day 2. So markets are holding hopes for tariff relief, especially in semis and industrial. So we're gonna talk about the tariff situation. We're gonna dive a little bit deeper into that. And we're also gonna talk about some other things that's been going on, like Elon versus Trump and things of that nature. So let's get into it. So, what information is coming out this week? First things first, you need to realize CPI data is dropping Wednesday. That's inflation data. So that could affect stocks heavily. We're gonna talk about the China trade updates. And silver. Silver just smashed a 13-year high. So the a couple months ago it was gold. Everybody was jacking gold, but now it looks like silver's on its own run. So don't count silver out. All right, let's keep going. So what is my watch list that I am currently watching? This is my watch list right here. AMD. I'm watching AMD because it's been on a tear recently. They have been getting some good news. and things have been kind of shaky with Nvidia, which has been helping them. And they've been also making some strategic partnerships and things to really put themselves back in the game as the number 2 competitor against Nvidia. So we'll see how it works out. It could be just a short term, medium term type of play, but I think Nvidia is going to need a competitor at some point. It may be AMD, it may be one of the other million other chip makers that's out here, but we'll see what happens. But as of right now, it has been on a tear, so I'm currently watching it. Disney is one of my favorite stocks. I've been telling everybody I know about Disney. I love Disney stock. Ever since its April lows, I think it's up about 20% since April. So it's been on a tear as well. That's why I'm watching Disney. Palantir. Palantir is another one that I like. I've been watching Palantir. I've been watching Palantir for a while. I mean, since it was like $40 a share. So Palantir is one of my babies that I've been watching for forever. So that's one that I'm definitely keeping on my watch list long term, especially. So Teradyne, this is a robotics company. They build robotic machinery and robotic systems for different companies and things of that nature. So the CEO of Nvidia told you out his own mouth that he believes that the biggest industry of the future will be robotics after the AI run. He said once everybody masters AI, the next thing is making humanoid and all different types of robot machines to do tasks. He said out his own mouth. So if you're not taking my word for it, take his word for it. So we got to get in on that. I trust his judgment. So Teradyne is one good one that I really like. It's also not really heavily priced yet. So it is doing pretty decent. And I'm going to watch it for the future just to see it pop. And silver, we already talked about silver being at a 13-year high level. So in silver and gold and assets like that are definitely hedges against inflation. So always a good thing to get into one of those when you got the market going up and down like it is with all the uncertainty. All right. So next thing, ETF watch list. We already talked about majority of these, so I'm not gonna really give you the rundown too much. That silver is a ETF. I put it on the watch list for the stocks because it only has silver in it. So I mean, I guess you can call it an ETF, but it really just has silver in it. So it's kind of like a single stock. But anyways, so we got VOO, SPY, IVV, QQQ, SMH, SCHD, and VIG. And it tells you what sector all of those belong to. So you can just screenshot that if you want to. All right. So let's get into some news really quick. I'm sorry, y'all, if I'm moving kind of quick. I want to get into this futures presentation. I'm excited. I'm gonna be learning just like y'all. So, all right, so let's get it. Musk versus Trump. If you've been here for a while, we already called this. I told y'all back in November when Musk versus endorsed Trump that this was gonna end badly. I told y'all that Tesla was gonna dive after falling out with Trump. People wasn't gonna like him because of his proximity to Trump. It just everything that I basically said came to fruition, and then some. So if you look right there on the left, these are some of the tweets that Donald Trump and Elon Musk have been going back and forth with. There's more, but I'm giving you the juicy ones. So just to read real quick, Donald Trump said the easiest way to save money in our budget, billions and billions of dollars, is to terminate Elon's governmental subsidies and contracts. I was always surprised that Biden didn't do it. Then Elon responded and said, in light of the president's statement about cancellation of my government contracts, as SpaceX will begin decommissioning its Dragon spacecraft immediately. So he's basically telling him, look, you cut my funding for my government contracts, then I'm gonna stop working on SpaceX stuff for y'all and let NASA do it. Because if you don't know, Elon Musk his SpaceX has been accomplishing more than NASA has done in many, many years. So they really need him. All right. So Elon Musk called Trump's one big beautiful bill a disgusting abomination. And Trump fired back saying Musk is unstable and might lose government contracts. Musk also made then deleted spicy claims about Trump in Epstein documents. He said that Trump doesn't want to release the Epstein documents because he's in them. So that's crazy, but hey man, this is what happens. So Tesla stock dipped hard, 15% in one day. It was actually crazy, but it did bounce back 8% pre-market as the drama cooled down. Musk even hit Trump with a heart emoji. So the retail takeaway is this beef is loud, but it's not killing Tesla yet. Still drama like this can shake up AI, EV, and defense contracts. So we gonna see what happens. Elon Musk is one of those ones that I don't know. I don't even know if he's stable enough to maintain his companies because it just seems like every couple months he's into something that's causing some type of tank to Tesla. But either way, we'll see what happens. It's just funny that's why I don't like buying Tesla personally. But I'm not against buying Tesla, but that's why I'm personally not a holder of Tesla, especially not long term because the guy is crazy. But anyways, all right, so let's get into the tariffs. Um, U.S. China trade talks just wrapped up day 2 in London. Progress is looking real good, especially on rare earths and tech exports. We got temporary relief. Tariffs on Chinese consumer goods dropped from 145% to 30% until August 12th. That's why e-commerce stocks have been heating up. Um, Metals, steel, and aluminum still taxed at 50%, keeping construction and industrial costs way up. So if you building a building or building a house doing real estate, I know you're paying that bag. But anyways, so World Bank just cut their global GDP forecast to 2.3%, down from 2.7%. So that means that the trade beef still got the global market shook. And we also have another development that just came along with this. Now, this is fairly optimistic news. It doesn't seem like things are going too bad with these talks, so hopefully things cool down as long as Trump don't get mad at nobody and be like, all right, well, deal's off now. You know how Trump is. So either way, all right. So another big problem for us is the U.S. debt just hit $36 trillion. So what now? So the U.S. officially passed $36 trillion in debt. That is about $106,000 per person worth of debt. Our debt is more than the defense and Medicare combined. Just the interest payments. The interest payments on our debt are more than our defense and Medicare spending combined. That is ridiculous. So what are you going to do? We don't know. But all I do know is Trump big beautiful bill is talking about adding trillions of dollars to the debt. So do with that information what you will. But what does that mean for us as ordinary Americans and as investors and traders? That means higher interest rates, likely sticking around longer. Slower growth plus pressure on government spending, which is a higher risk of stagflation. And it could shake confidence in U.S. bonds / credit. And we're already seeing that last one happen because South America is now looking to do bonds with the Chinese yen. And if you think I'm lying, look it up. So you do with that information what you will, but America's in deep doo-doo. I told y'all weeks ago that no matter about the stock market going up and down, people like to gauge the whole economy off the stock market. The stock market may be up 20, 30, 40 points. That doesn't change anything that has to do economically what our situation is with the interest rates, the debt, the yield, the bond yields, the bond market crashing. It's all types of stuff going on. The dollar losing value. So it's like, bro, at this point, I don't know what to tell y'all, but it's not looking good. It's not looking good, man. All right. So without further ado, I'm tired of y'all hearing me yap. So if my bully is ready, I can get him tuned up.
Yeah, I'm ready. I'm ready, bro. Yeah, I'm ready, bro.
All right,
You just gotta show
bad.
me how to share my screen though.
All right. Is it
Like the
letting you
share
share
button
your
right here.
screen?
I have to share my screen though.
All right, yeah. Like wiggle your.
Share button right here.
Yeah, it's just yeah. If you got the PowerPoint up, like if you have it like up on your computer, like in another
Oh
slide,
yeah, 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 yeah,
it
yeah.
should like come up and show you what all the screens you
Yeah,
got
yeah,
up.
yeah, 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 yeah.
Yep, just pick
Do you
that
see that
screen.
right now?
Hmm. Yes, sir. Futures trading 101, y'all. So while you pulling that up, I just want to ask you first things first. How did you even get into trading and how to trade in futures specifically?
Real quick, because I want to like see my screen and I want to be able to see
I
you
want to like
guys.
see
So
my screen and I want to be able to see you guys.
Yeah, the only thing
so
is, I think when you
I guess it's
screen share, you kind of have to do like everything through the Zoom screen.
okay. All right. That's cool. That's cool. Is there any
Cause
way
like
that we could
when I do mine,
Okay, all right, that's cool, that's cool. Is there any way that we could
like change the delay because it's kind of delayed a little bit? Like, would that be because one of us is muted?
change
Like,
the
am I
delay?
muted
It's
on
kind of
your end?
delayed a little bit. Like, would that be because one of us is muted? Like, am I muted on your end?
nah, you're not muted.
Okay. All right. Word.
I don't know why I got a delay. That might just be like some computer stuff.
Okay, all right, word.
That might just be like, you know how computers are.
Yeah. 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 All right. Cool. So I ain't gonna lie, but to answer your
Yeah, yeah.
question though, as
All
far
right,
as me
cool. So
getting into futures trading,
I ain't gonna lie, but
the
to answer
I'm
your
gonna turn
question
my
though, as
volume
far
down
as
just
me
a little
getting
bit
into
because that delay is gonna
futures
mess me
trading,
up. So hold on.
the
All
volume
right.
down just a
Cool.
little bit because that delay is gonna mess me up. So hold on.
So
Oh, you can
basically,
like
like
hear
I
yourself
started
echoing?
in trading stocks in
So basically, like I started
2020
in
in the
trading
pandemic, and
in
I would just do buy and
2020
holds,
in the
you know,
pandemic, and
not necessarily
I would
basic
just do
stuff,
buy
but
and
it wasn't
holds,
as
you know,
advanced as options or futures.
not
So
necessarily basic stuff,
I
but
started
it
getting into
wasn't as
options, and
advanced as options or
options
futures.
wasn't
So
as lucrative for me as futures
started
was.
getting into
And
options,
a
and
friend of mine, Alex
options
Williams, he
wasn't
put
as
me on the
lucrative for me
futures,
as futures was,
and
and a friend of
he
mine,
and
Alex
then from
Williams,
there
he
it
put
just
me
kind of
on the
just
futures,
went
and
up. Like it was just
then
as
from
far
there
as
it just
futures
kind of
goes, it's
just
just so much more
went up. It was
lucrative than
just
options when it
as far
comes
as
to how
futures
you
goes,
can
there's just so much
enter
more
and get out and
lucrative than
price
options when it
action and
comes
this,
to
that, and the
how you
third.
can
So
enter and get
I
out
definitely
and
love futures a lot
price
more
action
than
and this, that, and the third. So
options and all that other good jazz.
I definitely love futures a lot more than options and all that other good jazz.
Okay, okay. Okay, okay. All right. Well, hey man, look. I know everybody in here is eager to see your presentation. I'm eager to see it because I'm looking to get into options too. I'm looking to get into futures too, I have to say. I'm in options
Yeah.
heavy though right now, so that's what I've been on for real. But I've been
And
doing like regular swing trades, but it's nice to hear people. People don't realize now. Now that you said that, just for like a motivational, not even like on some bragging stuff. Keep it a buck though. Like tell people that from 2020 to 2025, how better your trading got. Cause at the end of the day, bro, I've been with you and I've seen you hit. So it's like at the end of the day, people don't realize that it don't take that long. Like you think it's long, but that 5 years is gonna fly by, and then it's gonna be either you learn something or you're gonna be in 5 years from now, you're gonna be in the same spot and still not making no money.
yeah.
So just kind of like explain like kind of like the grind of it all. Like
So I mean, the biggest thing for me was really just like putting
So I
myself in a
mean, the
position
biggest
where I
thing
could
for me
learn
really
as
just
much as
like
much as
putting myself in
possible.
a
So
position where I
how
could
do you do
learn
that? You know, you
much
read more, you know, you got to
as much as
sacrifice your
possible. So
time. the going out, the this, that, and the third. Like, Casey, like me and you in the same city, and we'll bump into each other based off communication. If we hit like, hey, this, that, and the third, like, what you doing? You want to get up, make some beats, or do some music, or talk about stocks. But other than that, we don't see each other out in the public. Like, we're not seeing each other out at Lulu's or out down in Chaco or out in these other areas. So it's one of those things to me where it's like, if you want to be in a position where your time isn't or where you're not working for your time, you got to sacrifice your time too. So the grind with that was just really for me, just putting my head down and saying, all right, cool. And at what position do I want to be in, and what do I want to show for myself and show for my journey? So I didn't really start getting profitable, bro, to be 100% honest with you, until my 4th year trading, just based off of what I was going through and just based off of consistent humps. Like, trading is one of those things to where it's like, and like you made a good point where you was like, either you're going to be in a situation money or you aren't making money. But the biggest thing about it is you can't be focused on the making money. If I was focused on the making money aspect of it, if I wasn't focused on it, I would have probably been a better trader faster. But because I was focused on getting money, I learned stuff later, and I traded with emotions, and I got lucky in a lot of my trades. Some of my stuff, I wasn't practicing good habits. So once you put yourself in a position where you can study the game and you can master the game and you practice good habits, now you're in a situation where you become a better trader just naturally. It just happens. So when you're not chasing a dollar amount and you're actually putting yourself in a position where you're being a student, that's how you really, that's when I really learned, like, all right, it's going up from here. To where it's at a point to where it's like, yo, I can come and we can sit down and, you know what I'm saying? We can sit down and have a coffee. I can pop a trade confidently. You know what I'm saying? I was never, like, it took time to get to that position, and it took a lot of losses. So like you said, like, how did it come to get into this point of this, that, and third? Like, I got a loss I'm going to show y'all in this PowerPoint. You know what I'm saying? So I take losses, not regularly, but I take losses. So it's a part of the game. You can't want the wins and not be able to accept the losses as well. It don't work like that. It's not gonna be peaches and cream.
Yeah, but that 5 years, it seemed like it was long, but it flew by, didn't it?
And it flew the fuck by. Yes, it absolutely did. It's like I'm looking up now, and it's like, damn, like I'm like,
that's what I'm saying. Because people's mindset, it's like,
oh no, go ahead.
Nah, it's because people's mindset, it's like, when your mindset, people be thinking like, all right, let me tell you, perfect example. Started the stock club probably like maybe like a year and a half ago now, maybe. And he's been telling people like, yo, it's gonna take time. But people have been watching me, like, even before I started the stock club, people was watching me like talk about stocks and start posting like trades and stuff. And it was like, yo, like, what's up with that? Asking me questions. And I kept telling them, like, bro, you gotta sit down and lock in and really like study this. I'm studying myself. Like, I'm telling them, like, bro, I'm nowhere near a master. Like, I'm studying. So, and the thing is, that was in 2020, like during COVID. Like, that's when I started really getting into stocks and stuff, watching Earn Your Leisure and stuff. So, that's when I got into it too. And it's funny because those same people that was like, nah, bro, I need money now. Like, no, I ain't trying to wait 5 years to get paid, bro. I need money now. Those same people still not getting no money doing what they doing.
Yeah.
And that's what I'm saying. And it's like people be thinking that the time be going by so slow. Like 5 years sounds like a long time, but bro, you're gonna go to sleep tonight, wake up, and 5 years have went by, bro. Like, it's that quick, bro. Like, people don't realize. But anyways,
it happens so fast, bro. It's like a blink. Like, I remember
this PowerPoint, man.
So fast, bro. It's like a blink.
Yeah. I was gonna say, like, shit'll happen in a blink. Like, I remember like my first conversation with Alex, and like him telling me like, yo, bro, or not Alex,
and
my boy Scott, and he was showing me like his account, like,
or not Alex,
because he got started in 2018,
my
like
boy
2
Scott,
years
he was
before the
showing me like his
pandemic.
account, like
So he caught that
he got
upswing.
started in
So he was
2018,
like,
like
yo,
2
bro,
years before the pandemic.
like I'm
Caught
studying
that
financial
upswing.
advisory, like this is what I'm going to school
Bro,
for,
like I've been
blah, blah, blah. And I'm like,
financial advisory, like this is what I'm going to
oh, this what you doing? You know what I'm saying? So it's just like, it's one of those things to me where it's like, I understood that
this
didn't
what you
happen
doing?
overnight, but
You know
it's
what
one
I'm
of those
saying? So
things
it's
to
just
where I
like, it's
said,
one
I'm
of those
like,
things
oh
to me where
shit.
it's like, I
Like
understood
I'm
that didn't happen
at the
overnight,
time I
but
was
it's one of those
23.
things where I said, I'm like,
So I'm
oh
like,
shit.
shit, by the time I'm
Like
26.
time I was 23. So I'm like, shit, by the time I'm 26.
You know what I'm saying?
Bruh, that's what I'm saying. Hey
So all
man, it's
motherfuckers gotta do
real,
is just
man.
put the pieces together, you know what I'm saying? Listen, man,
All motherfuckers gotta do is just put
I
the
mean, they
pieces
say
together,
that
you know what I'm saying?
with God, and I
Listen,
mean, I don't know if you're religious or anything like that, but they say that,
I mean, they say that
if you
with
planning
God,
something, then
I
God's
don't know if
laughing
you're
at you
anything
because it's
like
like
that, but
God
they
already
say
has a
that,
plan for you. But in the
if you
same
planning
situation,
something,
it's
then
like
God's laughing
you
at you
still got
because
to
it's like
take
God already
action and
has a
put
plan for
initiative
you.
and
But
steer
in
the
the same
course of your own
situation, it's
life.
like
You know, a
you
lot of
still
people
gotta
just kind
take
of sit
action and
back and
put
just let
initiative
things
and
go for how they
steer the
go and
course of your
drift.
own life. You
I
know,
ain't for
a
that,
lot
man.
of people just kind of sit back and just let things go.
That's
They
right.
trip. I ain't for that, man.
I think
So
it's like God is the type, he'll show you the way, but you gotta take the steps. Like he gonna build
yeah,
the path for you. He gonna lay the path right out in front of you. It's like a red carpet. Like when you go to a red carpet event, how they roll the joint out in front of you, he gonna
hmm
roll it out, but you gotta walk on it. Like he
you got to
not gonna
walk on it
push you down
exactly.
the aisle like, yo, you gotta go down this. Nah, he gonna roll it out and you gotta walk. Period.
Walk right down that joint. Exactly. Exactly. Ain't nobody gonna take the steps for you but you.
Right
You know what
down
I'm
that
saying?
joint.
So one thing I
Exactly.
want to commend you on
Exactly.
is
Ain't nobody
taking the
gonna take the steps
steps.
for you
You
but
know what
you.
I'm saying? Because
You know what I'm saying?
one
So
thing about it
one thing I
is
want to
like a
commend
lot of
you
people
on
ain't
is
taking
taking
the
the
steps to do
steps.
things
You
like
know what I'm
this,
saying? Because
especially
one
for,
thing
you know what I'm
about it
saying,
is
people
like a
like
lot
us
of people ain't
besides
taking
earning
the
your
steps to
leisure.
do
You
things
know what I'm
like
saying? This, that,
this.
and the third. And we still
Especially
got people
for,
down
you know what I'm
here who
saying,
still
people
kind
like
of
us
like
besides earning your
hesitant
leisure.
and this, that, and the
You know what I'm saying?
third.
This, that,
But
and the third. We still got
it's
people
one of
down
them
here
things to
who still
where
kind of
over
like
time,
hesitant and this,
they
that,
gonna
and the
see,
third.
bro.
But
They gonna see.
Yes,
one of them
sir.
They gonna
things
see.
to where over
They gonna see.
time
But
they gonna see,
enough of
bro.
that.
They gonna see.
Let's go ahead
Yes,
and get
sir. I
into this.
appreciate you, my guy.
I'm gonna
You
go
already know,
But
man.
enough of that.
for sure,
Go
for
ahead and
sure,
get into
for
this.
sure, for sure. So we're gonna head and dive into it. So the
For sure,
basics,
for
I'm
sure.
not gonna get into who
So
Michael
we gonna
Huddleston
head
is.
dive
I just put
into
his
it.
name
So
out there in case you wanted to do
basics,
your
I'm
own
not gonna get
research.
into who
I know you're
Michael
big on your
Huddleston is.
research, so you can go back and start from square one and see this, that, and the
I know
third.
you're big on your
I'm gonna
research,
pass
so
you
you can
some
go back and start
names.
from
If you
square
actually want
one
to
and
take these names
see this,
down
that,
now,
and the
you
third.
can for
I'll
YouTube.
pass you some
Um,
names. If you actually want to take
I'll
these
send you their
names down
links, but
now,
the
you
names are
can for
Justin
YouTube.
Werlin and Casper
Send you their
SMC.
links,
Them
but the
two
names are
guys,
Justin Werlin,
dope,
Casper
dope.
SMC. Them two
Those are
guys,
all dope.
dope,
Those are the only two guys who I watch
dope.
on YouTube as far as for futures
Those are all
trading.
dope.
Now,
Those are the only two
why
guys
do
who I
we
watch on YouTube
use
as far as for futures
ICT
trading.
or
Now,
institutional
why do
concepts
we
or however you want to
use
classify it? We
ICT
use them because it
or
helps us understand
institutional
how the
concepts
banks
or
are
however you want
moving.
to classify it?
So you
We
don't
use
want
them
to be in
because
a
it helps us
situation where you're
understand how the
trading
banks are moving.
and you're
So we
trading with
don't
the
want to be in a
retailers.
situation where you're trading
So retailers
and
are
you're
people
trading
who are
with
trading at the points
retailers.
where the market is getting
So
hunted. And I'm
retailers
going to get
are
into all that
people
too.
who are
But
trading
you
at
don't
the
want to be in a
points where the
situation where
market is
you're
getting hunted.
buying
And
or
I'm
you're
going to get into all
selling
that.
in a
But
position where the
you don't want to
market
be in a
is looking to
situation
sell
where
off
you're
or buy
buying
up
or you're
because
selling in
that's
a
where
position
nine
where the
times out of 10 the
market is
banks are
looking
looking
to
to
sell
buy.
off or buy up
So
because
how do we
that's
get
where
that
nine times
bias
out
and
of
how
10
do
the
we
banks are looking
understand
to.
where the banks are
So
moving and this, that, and the
how
third?
do
We
we
got to
get
start
that bias
somewhere.
and how
So
do
we
we
start with
understand
higher
where the
highs,
banks are
higher
moving
lows
and this,
in an
that, and the third? We
uptrend.
got to
And
start
in the
somewhere.
downtrend,
So
we
we
start with
start with
lower
higher
lows,
highs, higher
lower
lows
highs, and
in an
lower
uptrend.
lows.
And in the
So in this
downtrend, we start
picture,
with lower
I know it's not
lows,
as
lower
clear,
highs, and lower lows.
but this is a trade
So
that I
in this
took
picture, I know it's not as clear,
in
but this
around
is a trade
April,
that I took
and I took a
Hold on,
note
you
of it.
you not
So
sharing yet, bro.
basically,
in
a
around
lot of these
April,
notes you
and I
probably
took a
wouldn't
note of it. So
understand, but I'm gonna break
basically,
them down as we
a lot
move
of
through the
these notes you
PowerPoint.
probably
So
wouldn't
in a
understand, but I'm
nutshell,
gonna
what
break
we're doing here,
them
I don't know if
down
you
as
can
we
see my
move through
mouse.
the
Can you see my
PowerPoint.
mouse, Casey?
Hold on. Your
In a
Joint
nutshell,
not
what we're
shared
doing
yet.
here, I
Can you
don't know
see
if you
my
can see my
cursor?
mouse. Can you see my mouse, Casey?
You not shared yet.
You see my cursor?
You not shared, bro.
I'm not shared.
Can you hear me?
Oh Oh shit! Hold on, what?
Sharing.
Yeah, you're not. The PowerPoint ain't up.
Oh shit! Hold on, what?
I was like, hold on, because I just thought you was talking at first, and then I heard you say like reference something on the
Yeah,
screen. I
like
was like,
what?
oh,
Hold on.
Like,
it's all good, man. Just some technical
there's some technical
difficulties.
difficulties.
All right, there we go.
All
There
right,
we
yeah,
go. There
I
we
can see you
go.
now.
I bet,
All right,
bet,
there we
bet.
go. There we go. There we go.
All
So
right,
I
yeah,
just explained to you
I'm gonna
what
go
I
ahead
was
and
getting
mute up,
into.
man. I'm gonna give you the.
You said you gonna give me the floor? You gonna mute? All right, cool, cool. Say no more. I bet. So like I said, uptrend, downtrend, higher highs, higher lows, lower highs, lower lows. So with this move right here, we got an uptrend. So from 9:30 to 10, we going up. How do we know we're going up? Because we got a higher high, and then we make a higher low with this wick. Then we go up here, make a higher high again, make a higher low with this wick. Then we go up here and we make a higher high. But as you can see, we fail to make another higher high. So what that means is now we can anticipate a market structure shift. So how do we catch those moves? How do we see those moves coming? I'm going to get to it, right? Going back to what I was touching on earlier with stop losses, liquidity pools are areas where the market and institutions are looking to hunt every single time. It's like food, right? It's like playing Pac-Man. The circles that Pac-Man going around to eat, he going around to chomp and chew all of them joints. And if you look at these lines right here, where this big gray box is, this is what's called a fair value gap. And if you see right here, I got another one marked right here as bear fair value gap. And what that tells you is that's the bearish price action. And then you also got, if you got a bullish fair value gap, you got bullish price action. Now, as far as how we get a fair value gap, I'll explain that as well. But with a liquidity pool, you want to be cognizant of having your stop loss in a certain area. So as you can see where that red cursor is, I took a short there, took a little minuscule short, right? And the reason why my profit is so low is because I was bouncing back and getting myself back in profit for the day. So off this trade, I managed to do that. So with this trade right here, we come into this fair value gap, which is a bearish fair value gap, and we fail to continue higher. We fail to continue with that uptrend movement, and we then make a lower low, right? So instead of making a higher high, now we reverse all the way back and we make a lower low. So from there, we can say, hold on, we have what's called a market structure shift. And at that point, you can anticipate a trade, but you don't want to take a trade just off that move, because if that candle doesn't close, how this candle says 1 minute and 5 minutes and 15 minutes, that's all a representation of each candle. So each candle that you're seeing is 1 minute of price action of time. So that's 636, that's 637, that's 638, that's 639, that's 640. So if you come and you sell right here and you say, oh shit, let me go ahead and, you know what I'm saying, take a risk. Oh yeah, you up. You know what I'm saying? But if you don't take that first move and you try to sell again, copying the same move, your money's gone. You know what I'm saying? So again, and these are moments where I want to talk about with getting lucky and having confluence and having proper price action. You know what I'm saying? I took this trade. The cursor showing it right here, but my entry is in where that second candle is, not here, but right here. So I kind of shorted in the fair value gap back down here, which was a sniper. You know what I'm saying? I was aiming for this fair value gap, but I took profit because I didn't feel that it was going to continue to go in my direction. But that's another story. Next slide. And now we're at fair value gaps. This is one of my favorite things to use as far as a confirmation. So when you're trading, you don't want to just go off of hopes of what the market is going to do. You want to have confirmation. And that doesn't mean that it's going to happen. That just means that you have more of you can kind of sit back better and be like, you know what? Let me go ahead and let this play, because I got a fair value gap. I got a change in the state. I got all these things that are checking the boxes to let me know, hey, this trade is going to move in my direction. So what is a fair value gap? It's a price imbalance between candles, right? So I don't have a fair value gap drawn, and I'm going to pull up my live chart so I can actually give you some examples of all this stuff. But I just wanted to have the imagery up so you can see a fair value gap. If you look right here, where this marker is, where it says CISD with displacement, that's changing the state of delivery. If you look at this wick where I got that line at, and then you look at the wick right in between it, that's a fair value gap. And why is it a fair value gap? Because there's a gap in price where sellers didn't get to buy, or buyers didn't get, or where sellers didn't get to sell and buyers didn't get to buy. So what that means is that's a point of strength. That shows us that, okay, There were so many buyers here in this candle that it was able to not only gap up, but we were also able to continue higher. So that's a good sign to let me know, hey, we got some bullish price action coming through. And on top of that, it's also a mark to let me know if this fair value gap gets rated by either one of two things, either price action reversing and going bearish, or it just being a manipulation and turning into a liquidity sweep, I can then say I'm either going long or I'm going to go short back at that same area. So you can say to yourself, okay, bet. If you miss your trade here, you can wait for the market to potentially retest that area and then buy back in again. So fair value gaps are good for entries, and they're also good for confirmations to letting us know where the trade is going. Now, institutional order flow provides a few concepts. Order blocks, smart money, what's the SMT stand for? Smart money tool, yes. Smart money tool and fair value gap. And the smart money tool basically is like it's a futures trading term, which basically shows a divergence in price on both assets. So if you've got the S&P and the NASDAQ, and one's making a higher high and one's making a higher low, that's called an SMT, because both of those assets are supposed to move in sync, essentially. So the NASDAQ might be up 1.5%, and the S&P might be up 2.75%. That's because the S&P and the NASDAQ, of course, one costs more than the other. But as far as how they move, one is if one closes bearish and one closes bullish, we automatically got a price divergence. You know what I'm saying? Because it's not in sync. So that's something that you can look and say, you know what? Let me go ahead and look at the chart and say, either we're going higher or we're going lower, or either we're going lower or we're going higher. And how you know whether we're going in each direction, if there's an SMT at the highs of price, so let's just go back here, right? If we've got an SMT here where this red triangle is, that lets us know, okay, bet, we're going lower. If we have an SMT down here, that means at the lows, that means that we're going higher. Always remember, an SMT at the high means we're going lower, and an SMT at the low means we're going higher. Mean potatoes, baby. The checklist. And after this, after we do all this, I'm going to go pull up a chart and we're going to break all of this shit down. So market structure, aligning your higher time frame and your lower time frame. That is so important, because if you're not aligned, then 9 times out of 10, you might take a trade that goes in the wrong direction, and then you're getting emotional. Now you're risking to blow your account, and you don't want to put yourself in a position to do that. So with that being said, what you want to do is you want to make sure that your 1 hour, 4 hour, or however you're trading it on the higher time frame aligns with your lower. So if you're trading the 4 hour, you want to make sure that you align with the 1 hour. If you're trading the 1 hour, you want to make sure that you align with the 15-minute. If you're trading the 15-minute, you want to make sure that you align with the 5. And if you're trading the 5, you want to make sure that you align with the 1 or the 15-second, however you want to play it. But the higher time frame has to align with the lower time frame, because if your structure doesn't, then 9 times out of 10, you're about to get faked out. So you want to make sure that you're also going bullish or bearish. And how do we know that? By analyzing higher highs and higher lows, and lows and lower highs, right? So before we make an entry, what we want to also see after aligning said structure, we want to see a liquidity sweep to the buy side or the sell side. BSL stands for buy side liquidity. SSL stands for sell side liquidity. So what we got here at the top, if you look right here with this first trade where I got the BFG marked up, if you look at this short that I took originally, I got smoked. Why? Because this fair value gap wasn't respected, and I didn't let the candles close. And on top of that, there's more orders, there's more liquidity resting above, along with this red triangle with this red little circle right here. This is a bearish fair value gap. All right. So from right there, I'm already rookie mistake. You know what I'm saying? So, and like I'm saying, like things like that are going to happen. But off the next slide, you're able to make if you look at the end, you can see how it's like, oh, bet you bounce back, you get right back in, you win your trade. So it's one of those things to where it's like, as long as you, I don't want to go too far, but risk management will keep you being able to make more trades. So you're going to lose trades. Don't get that twisted. But if you risk properly, you'll be able to take as many trades as the fuck you want according to your risk and what you want to lose. So what we got here is we got a liquidity sweep, right, of the buy side now. We're not sweeping sell side yet. Oh, shit. We got a liquidity sweep of the buy side. We haven't swept sell side yet. So now we come into this fair value gap. And now what happens when we get in this fair value gap, we want to see manipulation or we want to see respect. Manipulation is literally explained how it is. It's a manipulation. So as you can see, once we come into this red area, what happens? Oh, bet we're selling off. So what that means is this fair value gap is already letting me know, yo, we not going up just yet. We're not ready to break through this area just yet. It's still a lot of sell orders resting in this gap. Say no more. You don't want to trade against that. If the market is telling you something, go with it. Don't do what you want the market to do. Do what the market is telling you. And if the market is telling you here that we're selling off and we're not respecting this area and it comes back to it, previously on this last trade, like we did here when we sold, oh, okay, bet. It came up here, sold off. All right, I'm gonna do it again. You you lost. But if you did it here, you would have came up like a motherfucker. That's an 800 point drop. So I'm gonna explain why this trade worked out and why the last trade that I took didn't work out. So this trade right here, we got, well, did not work out, but on that second entry, going back here, why this trade wouldn't have worked out. So if you're looking at this time frame, right, you got that manipulation clearly because once we come into this area, we shoot down. And now we come back up into it. And as you can see, these candles, they're not strong. If you look at these two candles right here, these are what's called displacements, displacement legs. And displacements are energetic pushes in a direction. So if you got a candle that moves 15, 25 points, that's a displacement leg. And it closes 15, 25 points up, yeah, you got a displacement leg for sure. You know what I'm saying? But at this point right here, once we fail to displace higher, once we enter this fair value gap, that's what's classified as manipulation because we failed to continue with the displacement. So once price reverses, we now have a confirmation to say, oh, bet this fair value gap is now manipulating. So from there, what we want to see now is a change in the state of delivery. And a change in the state of delivery is a closure below the last series of up or down closed candles. Now, the last series of up or down closed candles is these two right here. And right here, if you draw a line right here, okay, we get that. We get a series of closure. But what don't we get? We don't get displacement. Pay attention to the candles and how they are, how big they are. Like if you look at this orange box right here, these two red candles, these are nice size candles. That's a 15, 17 point candle. Easy. You got 30 points in 5 minutes. You're depending on how many contracts you got, you up. So if you look at that move right there, you can say to yourself, hold on, we didn't get the change in the state back here, but we did come and test this area. And also we got what's called an order block. Now, an order block is the last candle before that energetic move going lower. It's kind of what sets the move off in a sense. So basically, right, we come into this area, we come into this fair value gap, and then we create an order block. And on top of that, we got a liquidity sweep again, because not only did we get stopped out here where we swept highs, we created more highs, and then we swept them just to sell back off. So you probably like, bro, why the fuck would we create a high in a fair value gap just to go back up, test it again, and then sell back off and continue to dump lower? I'm going to explain it. The market moves in four ways. The market moves to rebalance to equilibriums, and that's the middle. If you draw a Fibonacci, that's the equilibrium, like the 0.05, like the middle price in the equilibrium. It's resetting the equilibrium. it rebalances to inefficiencies, which is fair value gaps. It hunts liquidity and it generates liquidity. So once we come up to this fair value gap and we sell off just to buy back up, what we're doing is we're generating liquidity. So we generated buy side and we generated sell side. So when we generated this sell side here, we got sell side, we got sell side, and we got sell side. Now the market's just going to go sweep all of that because we've swept all the buy side. So if you look at the time frame here, like this is 9:45. So the market just opens. So the market opens, and as you can see, we immediately sell off. We come back up, and now we sweep that market open right here with this move. Right here, we come down, come back up, and we create another high. I believe we might have actually swept the New York Open with this move. I'm not too sure. But regardless, the New York Open got swept. And once that Open gets swept, now you can say, bet. There's no more orders for this session. So if you go back from the Asia to the London, ask any questions you want after. But Asia has a session and London has a session. Asia session starts at 6. London session starts at 3 in the morning, I believe, our time. Once those sessions kick off, if the high or the low from those sessions haven't been swept, you can automatically target those for points in liquidity based off of the checklist if everything's checking out. So once we create that order block, once we get that order block confirmation, and now not only that, we get a change in the state of delivery. Oh, the only thing we're doing is targeting the buy side and sell side. So if I'm looking at here, the market is at what? I would say that's about 19,180 in this order block. If I'm looking at the New York, or if I'm looking at this low from the session here at 19,000, that's 180 points. A NASDAQ contract is it's 25 bucks per point. So if you get one contract, you do the math. That's damn near $1,500+ That's almost $2,000. You know what I'm saying? 50 points is a G. So 180, you close up to $3,000. My bad. My math is off. So, you know what I'm saying? All you got to do is have the right confluence, though. And now moving on to the last slide. I know I said this is the most important slide, but this is actually the most important slide because here's where we get into risk management. And this is what I wanted to show you guys as far as taking a loss and taking a lesson. So why am I showing y'all this trade and why am I showing y'all, okay, bet? If you look at this trade clearly, I'm in a trade that is deeper. Like my trade, my take profit, and I wanted to show this for an example. This is a prop account. So I'm in a trade where I'm going short. If it goes down to 19,237, I'm up. But my stop loss is greater than my take profit. Yo, you never want to put yourself in a position where you risk more than you gain. Your risk to reward should always match up. It should always match up every single time. So you don't ever want to put yourself in a position where you're saying to yourself, okay, I'm going to risk $500 to make $550. You want to say, I'm going to risk $500 to attempt to make $1,500. You always want to have a 4-to-1 or a 2-to-1, however you want to play it. You never want to be in a situation where your risk is greater than your reward. And as you can see, I'm risking more than 1% to 2% a trade. So if you're saying to yourself, all right, bet, I want to make $1,000 on this trade, you should be risking no more than $100 to $200, depending on what you want to lose and depending on what you're comfortable with losing. Because if you get yourself in a situation now where you say to yourself, oh man, this isn't what I expected to lose, and I thought this trade was going to go in my direction. I'm down. You're going to start making emotional decisions. And then you're going to put yourself in a situation like me right here in this prop trade. Well, this isn't really me, but you're going to put yourself in a situation where you end up getting smoked. And you don't want to get smoked like this. This type of getting smoked is the type of smoke that'll blow your account. And when you blow your account, it's hard to come back from that. You know what I'm saying? So if you're in a situation where you're not trading on a prop firm and you're trading with your own capital, you're putting yourself now in a situation where not only are you not risking somebody else's money, but now you're putting yourself in a situation where you're risking your hard-earned money. So if you done built up $1,000 and you done took a $300 trade and you can get smoked in the first 5 seconds, because mind you, these are a minute candles. So if we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, let's just call it 15 candles. That's 15 minutes. You down $300 in 15 minutes. You know what I'm saying? That'll make you think like, yo, I don't want to do this shit no more. But in the same situation, you could be, you know what I'm saying? You could be up in the same time just as fast if you have the right confluence and the right strategy. So the main reason why I didn't, I'm gonna go back to this last trade too, and I want to show why this trade didn't play out because one, we don't have a change in the state of delivery. We don't have a valid change in the state of delivery to say, okay, bet I'm going to take another short here. So if I were to take another short here, I'd be getting smoked. We do get manipulation. You know what I'm saying? We do get a liquidity sweep. You know what I'm saying? But we don't get a change in the state of delivery. So it's important to make sure that all of your boxes are checked before making a proper entry, right? And this is a trade also where me just saying to myself, all right, bet, like we got a change in the state of delivery here, but we didn't get it again. You know what I'm saying? So I got lucky by shorting at the fair value gap and not waiting for the change in the state of delivery. Don't do that. Don't ever do that. Always wait. Always wait. Why won't my slide click? There we go. Always wait for these things to check out. And the fifth one isn't like a checklist, it's just for your targets. So I'm gonna break this down now. Summaries, you know what I'm saying? Just wanted to basically break that down, but that's basically it for the most part as far as for institutional concepts, market structure, liquidity pools, fair value gaps, order blocks, all that good jazz. So now let me dive into some examples real quick. Let's pull up in Q. Can you still see my screen, Casey?
Can you still see my screen?
All right, bet. All right, so this is where the market is at right now, right? So this is live. This is live and direct. So we actually been selling, which is crazy. Damn. All right, so look, right? Prime example. If I were to be looking at the market right now, just off of what's going on, and matter of fact, let me get a clear chart for y'all. Let me get a clean chart. Yeah, let's do clean. I mean, yeah, I can start right here. All right. All right, man. So top-down analysis, right? Clear chart for the day. This is this week, right? So you're probably looking like, oh shit, what the hell is going on? So if we look back here, right, on the 1 hour, I can see here we got a fair value gap. That's been respected ample times, right? And remember what I told you, that fair value gap is that price imbalance in between in between a candle. So you got 3 candles, and then you want to say to yourself, okay, bet. The wicks in between these candles is a fair value gap. So from there, you say, you got one, you got this candle, and then you got that candle. This wick to this wick is a fair value gap. And as you can see how prices came and tested each time and ran back up. But what does that tell you? That lets us know that there is sell side all through here. And what is that? A liquidity pool. Where does the market want to go? It wants to reset to equilibrium. It wants to hunt liquidity. It wants to generate liquidity, and it wants to rebalance to inefficiencies. We've got liquidity and we've got an inefficiency resting right here, and this shit looking like it's aiming to crash. But that don't mean that we want to go ahead and just jump right in. We want to do an analysis. So with this right here, this lets me know, okay, bet. This is an area where I expect the market to either come back and retest, or I expect the market to go ahead and dump through. And I know that if we dump through this and we don't manipulate this fair value gap, all of these wicks right here is nothing but manipulation. So the minute we close under this fair value gap at like 671, 680, I know for a fact, hey, I can start aiming for this stuff down here now too, because we've already disrespected bullish price action by not continuing through with respecting this fair value gap. So I see that, right? Now I'm going to go on the 15-minute and I'm going to say, okay, cool. Do we have a change in the state of delivery? We do not have one yet because this last series of up close candles hasn't closed below, right? But we do have a fair value gap that we do have on the 15-minute. And it's also looking to be what? Disrespected. But if this candle doesn't close under it, then we can automatically anticipate that we have manipulation and the market isn't ready to go low as of yet. So the only thing that you want to do at this moment is sit and wait patiently for your opportunity. And what your opportunity is you want to wait for what? Our checklist. We can see that off the rip on the 1 hour. Okay, we look bullish, right? Technically, if I were to be really, really, really getting this down, we really look like we're consolidating. From Friday of this week, we've been not necessarily. We've been making slight highs. We've been technically making highs. We got a high at 22,000, we got a high at 21,969, and we got a high at 21,885. So technically we are moving up, but it's low resistance. So if we go look back here in this week versus looking back to the first week in June, we've got that's an uptrend for sure. Up, 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 and then we sell off for a little bit. But the point that I want to make is this leg is a lot stronger than this leg. So what that lets me know is as well is okay, cool. This liquidity that's in the market this week isn't as strong as last week. So either there's more sellers than buyers, or there's an institutional or there's an institutional order waiting to fucking activate. And when it does, it's gonna send the market and send that market in the direction that we need to know, because we can't really trade off of choppy markets. Like in a trade like this area right here, like you don't really want to be trading that. You want to be trading this, and you want to be trading this, and you want to be trading this. Even this is kind of choppy, but you still want to be trading that because the market's moving. You know what I'm saying? You don't want to be not active in the market when it's moving. So right now, looking at this candle right here, if you can see, this fair value gap ends at 894. Well, let me go back to the 15 minutes so we can see it. We're looking like we're about to displace lower, and we got 6 minutes left on this candle. So in the next 6 minutes, if we close out of this price action, I'm aiming to see this wick get taken out. And why am I aiming to see this wick get taken out? Because it's sell side liquidity. And that's what it looks like the market is drawing to. And what did I say earlier? You don't want to do what the market is. You don't want to do what the market is, what you want the market to do. You want to do what the market is telling you. So I'm looking to see this sell side get took. And why else am I looking to see this sell side get took? Oh, we got another one right here. Oh, and what else is right here? All these orders that haven't been took yet. So it's just lining up confluent. So you want to have your trade line up, and then you can get more bias as far as your entry. So you don't want to just be saying, oh, that's why I said with the dollar amount. You don't want to be saying, yo, I'm going to get in the market and make $1,000. You want to be aiming for points. So if you want to aim for 50 points, that's a 74-point trade right there. You can take that and be happy. But if you want to say, you know what? Let me go ahead and shoot for a home run. You go ahead and put in 2 contracts. You take one at 71, and then you let the other one run down to 150. You laughing. You know what I'm saying? So it's one of them things to me where when you have confluence for certain things, is so much easier, and it makes trading so much more relaxed and less emotional when you understand where you want where you see price going. So it's like right now, just based off of what's happened in New York session, I can see that. Oh, and look, this is why I said you got to wait for candles to close, because you got 4 minutes left, and we're still manipulating this fair value gap. If this candle closes in this area, the the fair value gap hasn't what's called inverted. And I forgot to explain that. When a fair value gap inverts, that's the term for it displacing lower. So if we let me show you a picture of a fair value gap inverting. Perfect, right here. This is a prime example of a fair value gap being inverted. This bullish fair value gap absolutely gets fucking disrespected and ran through and closed under for multiple for hours. You got from 1 in the morning, all it don't come back into that fair value gap until New York open on today. So it's one of those things to me where this right here, again, when you see moments like this happen, you can say, all right, let me go ahead and aim for a sell off of this. And what happens? Oh, as soon as we come back in here and test, we wicken down, we wicken down, we wicken down, and we absolutely dump all the way into this fair value gap. I'm gonna replay this, matter of fact. I'm gonna replay this so we can see it live. So this is the market open today. This is the market open today. Dump. You know what I'm saying? You got 8:30. You got not or sorry, you got 9:30 coming in. We got a nice fat candle. Run up, run up, run up. Up. We come and test this fair value gap. Oh, we respect it. Oh, dump right into this fucking fair value gap here. And the next thing you know, this is also a bullish fair value gap, mind you. So this is a bearish fair value gap, and this all the way over here is a bullish fair value gap. And what is it doing? It's respecting price. And as soon as you get that signal, you can say to yourself, oh shit, I might have missed that trade. I might have missed that short. But from here, I can get back in the long. I can get back long. Let me go to the 1 minute. You can get back long as soon as you see this fat ass candle come and say, you know what? We're respecting this order. Because this is a what? This is a 128-point drop. That's a big ass drop. If the market don't continue following through with that, you can automatically presume that we switching trends. So from there, what are we looking for? A liquidity sweep? We get that. Does the higher time frame align with the lower time frame? 5 minute, 15 minute? Are we bullish? Shit, yeah. Before this candle comes and wicks in, we're technically still bullish. And now that this candle has wicked all the way up, we're definitely still bullish. So it's one of those things to where it's like with the confluence, with your market checklist, if you have everything that you need in order to make sure that your trade goes in your direction, or not to make sure, but if you have everything that you need to have the confluence that your trade is going to go in your direction, trading just gets so much easier. So let's see where we're at now. Oh, seems like in the last 15 minutes, we're about to manipulate this fair value gap. So this fair value gap, it might not sell off yet, but it doesn't look like it wants to sell off as of now. Because if it wanted to sell off, we wouldn't be having all of these wicks. So at this moment, this would be a moment where you say, you know what? I'm not trading in this choppy price action. I'm going to sit, I'm going to wait, I'm going to go study, I'm going to go do this, I'm going to go do that. But don't ever try to force a setup. A setup that isn't there is going to put you in a situation where you lose your money every single time. So don't be in a situation where you force a setup. Put yourself in a situation to force good habits so that you don't take losses or you don't take lessons that you can't come back from. You know what I'm saying? So that's my TED Talk for today, ladies and gentlemen. I appreciate everybody tuning in.
My TED Talk for today, ladies and gentlemen.
Having me.
Appreciate everybody
Much
tuning
love,
in.
my boy. Much love, my boy. Much love, my boy. Hope Any questions you got, bro?
Much love, my boy. Much love, my boy.
I'm definitely.
Boy.
Any questions you got, bro?
Bro, that was fire, bro.
Definitely all.
Yeah, that's fire, bro. That was a great presentation, bro. I'm not gonna lie. I was over here taking notes too. I was like, all right, back, all right. For
Yeah.
sure, man. That was lit, man. Hey, look, shout out my guy, Chum Fu Billionaire, man. Follow him on the ground, man. Follow his handle, man. You know what I'm saying? You know what I'm saying? He legit, man, as you can see. All right. So I do have a couple questions though, just some general
Ask away,
questions,
bro. Ask away, bro.
and then some, interesting questions just for the people that's listening. All right. So, what is the main thing that kind of makes futures different than stocks and options and things of that nature?
Okay, awesome. So that's actually a great question. So with options, when you're trading options, you have what's called data, or sorry, not data. You have delta, you have theta, you have a whole bunch of Greeks that kind of put you in a position where if you take a trade that doesn't go in your direction, you're 9 times out of 10 gonna have to take it's gonna take a big move for it to come back from that. But if you're in a trade for NQ and you got a short at 2160 or 21,650 and it goes to 21,665, you still got a chance to finish with more money than you started with based on the time of the trade. Like if you hold that trade till next year, you're not going to get you don't have that's not going to affect your contract, and you're not going to have to pay more based on the contract. An NQ trade is 25 points per contract. Here's how much it costs. This is your stop loss. Do you have the margin in your account to be able to suffice this trade? Bet. If not, you can't take it. So with options, you can put yourself in a situation where you can get approved to buy options, but options, you won't get what's called margin, or you can marginalize your options, but futures is way more margin based. Like options, if I put up this $300, this is what I'm losing. And it's the same for options. But with options, if you widen your stop loss, you can risk more than you initially put up.
If you widen your stop loss, you can risk more than you initially put up.
All right, yeah. So, we running out of time again, but look, I'm gonna just make these questions quick though. So,
question?
Yeah, you did. That was a good answer.
Okay, bet.
So the next question is, how much money do you think somebody that's trying to start off trading futures has to have?
Well, to be honest, bro, I mean, like now it's so
a lot of these people gonna be beginners and they're gonna be wondering.
Yeah, like they're probably wondering, like, damn, like, do I need a certain amount of money to start? And it's so crazy how stocks have gotten so lucrative for people like us now versus when our parents were originally starting with, buying stock. Like you used to have to go buy a stock by calling somebody. You had to call your broker and have them place an order. You know what I'm saying? Not to mention, you also only were able to trade if you had access to the New York Stock Exchange or the Chicago Stock Exchange. Any of those big stock exchanges, those are the only ways that you were allowed to trade. But now we got platforms and now we got ways and lucrative ways to where it's like, okay, cool. We can get access to the market and we can get in on these games. So it's like, if you don't have a Charles Schwab account or if you don't have a Vanguard, you don't have to feel discouraged. You know what I'm saying? You can start with TopX or Apex. These are prop firms where you can pay $50 a month and you can basically put yourself in a position to get that account funded.
And you can basically put yourself in a position
you take $50 in a month, and it takes you 3 months to get funded.
I'm glad you said that because that was my next question.
Yeah. So if it takes you if it takes you 3 months to get funded, and you put up 150, let's just say in that time when you get funded, you made $5,000 off your trades.
Let's just say in that
money that you made $5,000 goes to your funding, and you can now withdraw that because you succeeded the combine.
And you can now
so once you succeed the combine, now you can take the profit that you made through practicing. So you get a practice account and you get a live combine account. So if you want to do it either way, if you want to say, okay, bet I'm gonna practice here, and then I'm gonna go into my combine when I'm ready, do it either way. And then I still use my combine and I use my practice account.
Do it either way.
You know what I'm saying? It's still one of those things to me where it's like, as long as you're in a situation where,
you know what I'm saying? It's still one of those things to me where it's like,
what's the word I'm looking for? As long as a situation where you're staying ready, you ain't never got to get ready. You know what I'm saying? So keep a prop account, keep a live account, all of it. You know what I'm saying? But as far as just like if you're saying, you know what, I don't want to risk that much capital. You know what I'm saying? But go ahead and put up $50 a month, man. Anybody who tell you they don't got $50 for a month, they fucking lying, man.
Anybody who tell you they don't
real talk, bro.
For a month, they
real talk, bro.
Real talk, bro.
They're lying to their teeth, bro, because it costs $50. You can't go $50, bro. I can't think of like I'm just looking in front of me right now, and I got some. I'm looking at a jar of vinegar. I'm looking at a can of sweet corn on top of my microwave. I'm looking at my Swiffer jet right here. I'm like, bro, that's damn near $50 right there. Like, bro, like you gotta take $50 and go to the store. Motherfuckers take $50 to go get some weed. Motherfuckers take $50 to go take a joint on a date. Man, put that $50 up and invest in your future. You're not hearing this from Casey, you're hearing this from me. So take that $50 and put it up, man. Put it up.
Take that $50, put it up, man.
All right, one last question before the time run out. You can just give a quick answer if you want to. I just want to ask about, since a lot of things in especially the normal stock market have been getting affected by political and things happening in that nature. So I just wanted to ask you, like, with all these things going on with inflation and interest rates and things of that nature, how do you kind of like stay ahead of those movements? Do you kind of like do extensive research, or you don't really kind of get into all that? You really just worry more about the technicals?
Nah, bro. I'm glad you said that, because with futures, technicals and fundamentals matter. So like with tomorrow, bro, I'm in the market because it's CPI. So like I'm gonna just show you this real quick, like I'm gonna show you a news candle. Like that's actually a very I should have showed you that.
I'm gonna show you a news candle. Like that's actually a very
something real quick.
I should have showed you that.
Hey, look, man, KC gonna ask the right questions.
Yeah, KC gonna ask the question. Yeah, KC gonna ask a good question. KC for damn sure gonna ask a good question.
Yeah, KC gonna ask a good question. KC for damn sure gonna ask a good question.
Let's see, because we had one on Friday.
We had one.
Oh yeah. It was Thursday. Let me go to Forex Factory right quick. Hold on.
Oh yeah. It was Thursday. Let me go to Forex Factory right quick. Hold on.
Damn. Unemployment. So look.
Damn.
Look.
Unemployment. So look.
I don't got 350. Shit. Fuck. But yeah, bro, you looking at this big ass candle right here, bro? This fat ass.
Yeah, bro.
Big wick right here. You see how this candle comes up and wicks, and then it wicks right back down? That's a news candle. So with news, that'll put you in a position where you can say news will show you where the market is drawing to. So you might see news where it's like unemployment, like let's just say the unemployment was good, and it's like, okay, that's good news, but the market fell.
Let's say the unemployment was good
because the draw on liquidity is lower. So you want to pay attention to that, because if the news comes out and the market moves a certain way and closes,
because if the news comes out and the market moves a certain way and closes,
you on one.
Okay. Yeah, that makes a lot of sense.
You know what I'm saying? Sir. So.
Hey,
like,
man,
as far as,
look,
like, the news,
I can't thank you enough, man.
No, I was gonna say, like, as far as like the news, it definitely is a big factor. But I was gonna say, like, as far as like, go ahead and say what you're gonna say, bro.
It definitely is a big factor. But yeah, go ahead and say what you're gonna say, bro.
My brother, hey, man, look, this was amazing. We gotta get you back on here again, man, for real, man. We gotta try to set something up for the community, man. Something live that people can come to, sit down, take notes. type vibe, man. This was amazing. I learned a lot. I'm sure the audience learned a lot. Between both PowerPoints. I know y'all got PowerPointed down tonight, but hey, the
Yeah,
information
and
is
it's
important because I'm telling
and
you,
if they
this
need the
information,
PowerPoint, like
these are the type of
I'll
things that people can change
I'm
your
I'm
life
gonna
with.
send the PowerPoint to you too with the links and stuff, so you can pass it out to your community.
Send the PowerPoint to you too with the links and stuff so you can pass it out to your community.
Okay, yeah, that's a bet. But this whole thing gonna be on YouTube anyway, so go watch that YouTube video, run them views
Yeah.
up, and share it to everybody you want to see it. Share it, man. Share that video.
Yeah.
Yes, sir. But look, appreciate you, my brother, man. I'm about to get up out of here, but I appreciate you always, man. I'm gonna talk to you offline. You know, we gotta cook something up for sure, bro.
Yes, sir, bro. Yes, sir, bro. It's all love, Casey. I appreciate you having me. It was an honor. It was a
Yes,
pleasure.
sir, bro. Yes,
Any
sir, bro.
questions
It's
you have, anything
Casey. I
you need,
appreciate you having me. It
you
was
let
an
me know,
honor. It
my
was a
guy.
pleasure. Any questions you have, anything you
No,
need,
hey,
let me
look,
know, my
and to
guy.
answer your question too, I did
Already,
not
bro. Love,
overtrade on
bro.
Friday, bro. Remember when we left Starbucks? You
And
said don't
to answer your question
overtrade,
too,
don't
you did not
overtrade.
trade on Friday, bro. Remember
I didn't do it, bro. I didn't.
Hey, look. Stick to your rules, folks. Stick to your
Stick to the
rules.
rules. Love, man. Blessings to you, bro. Peace, God.
Rules. Love, man. Blessings to you, bro.
All right, brother. Love.